Well, good afternoon, everyone. Welcome back to the channel. So I actually have Papa Powell on behind me over here, and I'm half listening to what he's saying, and I'll be reacting to it live. So far, it looks like we're unchanged for our interest rates for the last month of the year, and I like what he's saying so far. He actually said inflation is still too high. So, number one, he acknowledges inflation obviously exists, and he thinks it's still too high, which is accurate, and I agree with, of course. But let's look at the impact that his statements so far are having on the markets. So, what we'll do, I'm not sure how the sound will jive with me talking. So far, it looks like the markets are up, and they may be actually going up more. Usually, the markets react very positively to what he says. So let's just share Yahoo Finance, and then we'll discuss the impact that his statements will have not only on the market but on the YieldMax and the Defiance funds too, like what the implications will be for our dividend ETFs, our favorite ones. So it looks like the market's reacting actually really well since he started talking about 3 minutes ago. um, I'm noticing all of them are actually going up while he's speaking. So the Dow is way up. The Dow actually is up to almost 37,000. I just heard the Discord beep, so let me get that going again. I'm gonna go live in the Discord. So I'm voice connected in the Discord. So anyone brave enough to join the coach and talk, we'll be more than happy to have you on. And keep in mind, we can't hear you on the regular stream. So with all of that being said, here we go with Yahoo Finance here. We've got markets reacting really well to what Papa Powell is saying. And hopefully, I'm really eager for a rate cut, actually. So hopefully that comes sooner rather than later. So yeah, the Dow is up 243. The Nasdaq is actually up, and I believe it was actually just under 100. So we're actually having a little surge here, 14,649. How about those TQQQ options, huh? Those leap options. The Russell is up over 1%. So actually, the Russell, percentage-wise, the Russell is up the most of all of them. So I want to look at the small cap fund that I've been talking about, the small cap ETF. But first, the S&P. Wow, the market the market is really liking what he's saying because we just jumped up another like 8 points in the S&P. He said activity in the housing sector. I didn't see it. Labor market remains tight, but coming into better balance. Yeah, well, I think more people might be entering the workforce. So we've got Apple stock is up, Coinbase is up, Coney is up. Coney's actually going to get back to where it was before the ex-dividend date, it looks like. So let's see. Let's check Discord here. We're probably going to do a women's channel in the Discord. Exponential here says Ethereum is rocking, the triple Qs are rocking, and SOXX. Let's look at those. Let's look at some different funds here. So SOXXX. And then I want to look at another alternative Tesla fund. Wow, look at this in one day. This would have been a great. Well, this is $9 today. Okay, I don't know much about this fund. This has been around, it looks like, since 2001. And it's look at that. It didn't really get impacted by the Great Recession. Well, it did. Actually, it did, relatively speaking. This is kind of a zoomed out view. It was at like 50. It was almost $70, and it went down to like 27. So these are the kind of things we have to stomach as investors, because if you had stayed in here and you stayed in all this time, look what you got here. This is incredible. So then we started running up here, and then ran way up. We've actually matched where we were in 2021. So that's the first like full recovery I've actually seen from the 2021 highs. We were at 326. That was our low point in October 22. 535 in July. We dipped again. Now we're coming back. Everything seems to be rallying. So this one, I believe this is the one we've been talking about, the Magnificent Seven, which YieldMax is also going to do an ETF for. So the top holdings in this one are AMD, Broadcom, Intel, NVIDIA, one of our favorites, Texas Instruments, Qualcomm, Micron Technology, KLA, Microchip Technology, Lam Research. And that's interesting. So see, the fact that I can rattle those company names off just like that shows how qualified I am as a financial guru, right? Just kidding a bit. Most of you all know. Know me. Okay, we have a comment here from Kurt Thomason. Just jumped in. Random question. Is the YieldMax peeps allowed to time their release dates? For example, if they made one for Palantir, could they release it when Palantir is on a low end on a tech basis? Well, the funny thing, I think they do try to do that because their timing has gotten better. He did say the timing for releasing Tesla was like the worst that it could have been for releasing any kind of a fund. So good question. I think they are trying, and they are, not only are they trying, but they do seem to be getting better at it. I don't know definitively that they're purposely trying to time it, but because once they announce a release date, they have to stick to that. But for Tesla, if you look, and like he said on prior interviews with me, he said that it was like the worst time they could have launched. But for they did better with SQY and with Coney. I mean, those were like actually close to like the best times they could have launched, actually. So really good on their part. Okay, back to this one. So we have SOXX, and we'll look at the. I assume this is for Ethereum, and then triple Qs. I'm looking in the Discord here. By the way, if you all haven't joined the Discord, definitely please do. So ETHE is Ethereum. So Ethereum is rocking. Wow, look at that. Should have bought it a year ago. I knew everything would come back eventually. Got that part right, at least. Okay, we hit a low of 1,000 back in June 22. So we've doubled since then. We've been really coming back. Yeah, how about that? We were at our high point of 46.31, November of 21. Look at that. The S&P is a perfect 4-4-4-4. 4 4s. That's cool. Look at the NASDAQ rocking. Wow, I tell you, the market is reacting well. Powell says we expect labor market easing to continue. We anticipate getting inflation to 2% will take some time. That would be great. That's the goal. But my take, as you all know, with inflation is that even if we get back to where it's 2% on an annualized basis, we still have the prices baked in where it was like 9% above what it was and then another like 6% this year. So even if we get back to 2%, the prices are still baked in. You know, it's like we're not going to see 2020 prices again. Which is funny because I feel like all the credit card churning and other strategies I've talked about, those come into play more so now. But all it's doing, it's helping you just you do all this work just to basically get the price at like what it should be. You do like all this extra work and like couponing and saving and stuff just to get the price of stuff like probably at like the fair price that it should be. But anyway, better than nothing, right? Okay, so that's Ethereum. I know we're not a crypto channel, so we will uh, get off of that without hesitation. And then Square, we're up to almost 70. SQY, we actually dropped down. Tesla is down. Tesla is also down, and it's performing about identically with Tesla. So the interesting thing, oh God, we're at $11.12. We're dropping again. The interesting thing, there's times that Tesla has tracked almost perfectly with Tesla. We wish that could be the case all the time. Now, Powell also said he's taking questions now. Maybe I can actually go here. Let's see if this works. I might actually, I'm just going to put it on here. How about this? Let me see if I can unmute this.
If it didn't cut rates if inflation fell. Thank you, sir.
Let me know if y'all can hear this.
So, of course, I don't comment on any other officials, even those who work at the Fed.
Oh, he should.
I'll try to answer your question more broadly. So the way we're looking at it is really this.
Hold on a second.
When we started out, right, we said the first question is how fast to move, and we moved very fast. The second question is, really how high to raise the policy rate, and that's really the question that we're still on here. We're very focused on that.
So he's saying we're prepared to tighten policy further if appropriate. Now, for all my dividend people, how will this affect our favorite dividend funds? Wait a second, did I pause it? I wanted to just mute it. Hold on.
That as I mentioned,
technology, right? Or the operator, the smooth operator sometimes. Okay, so how will this affect? So obviously, like I say, once they start cutting, hopefully the tightening's over, even though he's saying they will tighten if necessary. And this is good because we have the closed captioning, so I don't need to have him on volume. But anyway, once we start cutting again, that's going to be, I think, a massive boost for the markets, which I think in turn will help all of our dividend funds because as the market goes up, our premiums will be higher in all of these funds. So he's going over, this is a good chart here, the Fed funds rate from 2006 all the way to now. So we were at 2.25%, 5.25. Oh, that was the last hike. Dang, I was hoping that chart would last longer. The brain trust at Yahoo, they're doing better, but still not quite perfect. But anyway, that chart, you can go back and replay this if you want to see that again. They were going over the history of the Fed funds rate, and obviously we're at like a 21-year high with that. So he says again, we're fully committed to bringing inflation to the 2% goal. Must be nice if you're a commentator and you have like a 2 o'clock show. You basically got the day off because it's just Papa Powell talking. But of course, yours truly, the coach, doesn't get any days off because I've got to cover it. Oh, lots of questions in the room. Who are these people here? Reporters? Let me hear the question. Let's listen to the question.
You forecast. So many people mentioned what their rate forecast was, and
Oh, some meeting he was in, people mentioning or they're asking about like what their rate forecasts were. So, anyone want to know my rate forecast? Let's see. Some of you all wonder how I can be able to accurately forecast things. Well, it's only because I have advanced financial forecasting equipment in the room with me. So let's ask, are we going to be lower or higher for interest rates next year? Let's see what the coach's oracle tells us here. Most likely. There we go. So this 8 ball, I call it the magic 8 ball because it's taught me most everything I know, and that's what I really like about it. And then of course we have the space helmet. If anybody has any, you know what I should do? If anyone asks Papa Powell a dumb question, we'll break out the space helmet. How about that? So let's see here. Markets. So we're up, we're surging, and all the market. Look at that. So since I've been talking to you all, the market has gone up. The S&P has gone up from like 30 to like 50 just since I started live streaming. Not suggesting any correlation, of course, but just it is a coincidence. What does my orifice say? Well, it said you would join about at like 2:43, and I think you were a minute late actually. So that's what it says. But it does say that the rates will be lower next year. I didn't believe it until it said it, but now that it said it, now I'm a believer for sure. So, and of course, it's always a great investing strategy, investing with such equipment. And of course, my regular followers know this is all a bit of a joke. Of course, we're just having entertainment here. Oh, 2.5% for the Fed funds rate, or 2.5% lower. I was hoping it would be back to like 2.5%. That would be great if it would be. Um, well, this makes for easy videos. All I got to do is just talk about what he's saying intelligently anyway. Okay, let's see what she's saying here. We got a woman asking a question, so we definitely want to hear it.
Can you talk about some of the ways in which the economy surprised you most this year, where you thought it would behave in one way and had to pivot to respond? Thanks.
so I think
That lady behind her has like 2 masks on. Jeez. Is COVID like surging again or something?
really forecasting a recession for this year.
So I get confused about these forecasts of a recession because the definitions of recessions are ever changing, as we know. So I'm to the point like I don't even know what constitutes a recession anymore. Now, someone did make a good point the other day. We didn't have like massive job loss. We only had a contraction in GDP, which was very minimal, and then we came right back like the next month. So, but I feel like to compare apples to apples, so the last recession that we technically did have, or that the media actually acknowledged, was ironically in 2020 during COVID, and that was a very short-lived recession. But well, we did have a lot of job loss there, but a lot of those jobs came right back. And I don't want to get too political, but ironically, I think the current administration takes credit for a lot of those jobs as created jobs that just happen to come back from COVID. They were only gone maybe 6 to 12 months, if that. So, that's always nice. Anyway, I see I'm losing some of you, so I don't want to get too far on a tangent here. Blood count 8895. Oh, is that your actual number? That's cool. Shouldn't cut rates until they achieve what they said they would do, which is maintain 2% inflation. Oh, I know. The selfish side of me wants the markets to soar, which they kind of already are. So maybe we don't need rates cut. We'll see. Hoffman says a more leading indicator is the price of your groceries and gasoline. The rest is all BS. Does your day-to-day life cost more? I 100% agree. Absolutely. And what I say to that, like they say, well, the media very, very rapidly, they've been trying to really lay the groundwork this year, basically hinting that inflation like doesn't exist at all, or it's a mirage or something. But I will say, in real terms, to Hoffman's point here, inflation, there's been more price increases at the store and at restaurants and stuff like that this year than there was last year. Now last year, hang on, let me get the small pencil here in the shot so I look more official. There we go. Did I get it? There we go. If I'm pointing like that, I look more official. That's what I want to do. See, you all don't get this. If I edit my videos, you don't get the live, like the human side, so to speak. Even though some people think I'm just AI, which I don't know. Am I? No, I think I'm real. At least that's what I was told. But anyway, all right. So, yeah. So at restaurants and grocery stores and stuff like that, I've actually seen more price increase this year. Now, on the flip side, to be fair, gas was higher last year because we had the whole Ukraine thing. We had, well, I think they called it Putin's price hike. I have different theories on that, but gas did start to run up when the whole Ukraine situation started. So, when in doubt, blame Putin, right? So, like when my 8 ball doesn't work, I blame Putin. It's all Putin's fault. Anyway, okay, let's see. What do we have here? So we read that one. Raising 30% and then cutting 15% is still a 15% increase, and now the new normal. Well, you're right, but the way I say it, like if the last guy raised it and then I cut it, but we're still higher. This is the logic. This is the conventional logic. So if the last guy raised it really high, and then I come in and I cut it, then I get all the credit for cutting, even if we're at a higher interest rate than we were like 3 or 4 years ago. I still get the credit for cutting it like by this some massive percentage. Just like that's how jobs numbers are done too. Anyway, fun stuff. So I saw we had a Hunter Biden sighting today, by the way. That was interesting. We'll see where that goes. That was interesting, like I said. Well, markets are holding steady. Let's hear this real quick.
And I'm wondering, just related to Steve's question, how the tactics of this play out, given the slowing of inflation and the fact that the deeper you get into 2024, the closer you get to a presidential election. Do you want to front load this, in other words?
Yeah, no, we don't think about political events. We don't think about politics. We think about what's the right thing to do for the economy. The minute,
And that's what the Fed's supposed to do. The Fed's supposed to be apolitical.
we just can't do that. We have to think, what's the right thing? We'll do the things that we think are right for the economy at the time.
Papa Powell's got a bit of a turkey neck going there. So that woman in the audience with the two masks, and she's got that like bright pink shirt on. That's the first thing I noticed. But then, wow, like she's got two masks on. That's really standing out to me.
See that people are not writing down rate hikes. That's us thinking that we have done enough, but not feeling that really strongly, confidently, and not wanting to take the possibility of a rate hike off the table. Nonetheless, it's not.
Can you all hear him, by the way? Because I'm actually unmuting him, so I don't know if at least I have the closed captioning on anyway. But I don't know if you all can hear him or not.
And it talks about it. People have individual assessments of when it will be appropriate.
Let's check the Discord here.
To start to dial back
And
on,
none of you
on
have
the
joined.
type policy we have in place. And that's a discussion we'll be having going forward. But that's another assessment that we're going to make very carefully. So as time goes forward.
I want the lady with the two masks to ask a question.
That's a full point below the current level with cuts beginning around March. Is this something that you are broadly comfortable with?
So this
I want to see like a TikTok interviewer come in here and ask a question. We need to mix it up a little bit.
over the course of the year of markets moving away and moving back and that kind of thing. So, and what I would just say is that we focus on what we have to do and how.
What's crazy is the Dow. The Dow is up so much, but I mean, percentage-wise, it's a much larger index, of course. Let's see. We got a yes and a yes. That's good. Can we go for 3? Can we go for the hat trick or the yes trick? All right. What else do we got here? Let me look back at Oh, look here, a Rob Smith sighting. Yes, this is good. Just purchased some Tesla at 1098. Oh, wow, it's dropped even more. Maybe I should buy. Good idea to stream. Should you not be at day job? No, I actually took the week off today to be with you fine folks, so you all should feel honored. Oh, great name. We've got Yield Maximus on here that says yes. So there we go. We got the hat trick or the yes trick, which the 8-ball told me we would get. So the 8-ball is never wrong. Well, how do I say it? It's actually, it's not always right, but it's never wrong, right? What do we have here? What is it saying? It's still kind of going out on me here. Outlook good. All right. Good deal. 1125. Yeah, we're fluctuating a lot. Let me know. So when I unmute Papa Powell, let me know if you guys can hear him. Let me know in the comments.
It's great. We just need to see more. We need to see, continued further progress toward getting back to 2%. That's what we need to see.
He says no one's declaring victory. Well, I know some people that are.
And that it's one of our 2 jobs along with maximum employment, and they're equal. So we're very focused.
By the way, so he mentions maximum employment. Do we still have the situation with like, well, we had the great resignation going on and we had all these people that were not working, and I think they just dropped out of the workforce, which is why part of the reason why the unemployment rate stayed so low. Hoffman's got jokes here. Outlook not so good on Floridian Cougars. I've actually gone younger now. I'll keep you guys up to date on that, but you notice I was gone for like 4 days, so stay tuned on that. Yes, we hear him. Oh, good. Glad you hear him. Oh, who do we have asking him a question now? Let's see what she's got to say.
Or put another way, is below trend growth necessary to cut rates, or would continued progress on inflation alone be sufficient?
So we'll look at the totality of the data. Growth is one thing. So is in.
I didn't hear the question.
Yeah, so we'd look at the total as we make decisions about policy changes going forward. We're going to look at all those things.
Wow, the Nasdaq is ripping. It's at 175. Look at that.
The outlook and the balance of risks as well. So that's what we'd be looking for. If we have stronger growth, that'll be good for people. That'll be good for the labor market. It might actually mean that it takes a little longer to get inflation down to 2%. We will get it down to 2%, but if
I think we deserve negative inflation after all of this. Like, we should get like negative 2% to offset the last like 2 years.
would answer.
I guess the
Ooh, her
question I'm
mic's
asking, if you don't mind a
fuzzy.
quick follow-up, I guess the question I'm asking is,
That lady's computer with all the foliage on it is distracting behind her.
Itself a problem. It's only a problem insofar as it makes it more difficult for us to achieve our goals. And if you have growth that's robust,
Yeah, I was distracted.
what that will mean is probably we'll keep the labor market very strong. It probably will place some upward pressure on inflation. That could mean that it takes longer to get to 2% inflation. That could mean we need to keep rates higher for longer. It could even mean ultimately that we would need to.
How does it go?
It's the way our policy works.
Do I need to mute him? Is it better if I mute him? I want to do some comments here. Oh, lots of questions.
Hi, Chair Powell. Neil Irwin with Axios. How do you interpret the state of the labor market right now? And in particular, you've referred even today to evidence that it's coming into better balance. What would you need to see to conclude that it has reached that balance?
See, if I was up there answering questions, I would say, I don't know. How do I interpret the labor market? It's decidedly so. Okay. I thought it was going to say like outlook not so good. Let me get to some comments here. What's his name? I'm not giving any details until you've got to let things pan out a little bit. But yeah, you got jokes, Hoffman, of course. Got some QQQY at 1789 buying day. Got a beefy Tesla dividend today. Oh yeah, that's right. Today, that's the other video I need to do. I've got to maximize that production value, right? That's yeah, our dividend payout date today. That's definitely a video that cannot be left on the table. I think, you know what, actually I should just sign off of here and start that one like right now. No, I'll save that for a little bit later. We'll recap today probably after the market close. But yeah, I am off this week. Well, so to your point, yeah, I've been distracted. Like those last 4 days, I had a lot of other things going on over those 4 days. So I've got to get on that for sure. There's only so many hours in the day. Still down. Is that $57 or 57%? $57 is pretty good. I'm actually down like way more than that. So if that's all you're down, that wouldn't surprise me. Wow, look at all the hands. Everyone's so eager to ask questions. Okay, let's see. Let's go back here. I want to hear the next. Who's this?
By your forecast, by this sense that we all
Oh, she's British.
planned in. Yeah, then when we hear from the general public, there's a lot of discord about economic conditions.
There's a lot of discord, huh? There's also a Discord thread that the coach runs.
It may be. A common theme is that while inflation is coming down, and that's very good news,
It doesn't exist.
some goods and services are coming down, but overall, in the aggregate, the price level is not good. So people are still living with high prices, and
Duh.
that's not that is something that people don't like. And what will happen with that is wages are now real wages are now positive, so that wages are now moving up more than inflation as inflation comes down, and so that might help improve the mood of people.
So that was a dumb argument that I
But we
used
do
to
see-
hear. That was one of the dumbest things. And he's not saying that, but he's kind of implying it. Like for a while they said, oh, well, inflation's okay because wages are going up faster than inflation, which wasn't necessarily true. But, just the justification sometimes that gets used for stuff is infuriating, to say the least.
That really enables us to work for and achieve an extended period of high employment, which is so beneficial for families and companies around the country.
All right, let me do some more comments. What's this? What, 24? I think. What does this mean? Percent? Oh, 57. Oh, yeah. So you are down more than me, but you have a lot more money than I do too. So that's the silver lining, right? Bought some more Coney. I think it's going to 30. IWNY, SQY, QQQY. Yeah, those are all. Certainly, I'm looking to do leap options on the major indexes. When did you get into Coney? Because Coney, if you got into the right time, you're definitely balling in that one. Hours in a day. Really, that's it. I wish I could invest my hours and get more back. Like at least I can invest in the market and get a positive return, but I can't like save time or like invest time. It's something you never get back. You see those stats like there's 86,000 seconds in a day or something. Unless you've heard the Forrest Gump joke, how many seconds are in a year? 12. There's a January 2nd, February 2nd. Anyway, yeah. His next gig will be to become a financial guru. Return on time. Yeah, exactly. Wouldn't that be great if there was? Well, there is a return on your time. I agree with that. But there's no refunds on your time. There's a no refund policy on time. So, yeah, we definitely still have a ways to go for sure. Like I said, as far as I think, so the market's doing well overall. So I think a good market is going to bode well for all of our dividend funds for sure. Because, like I say, the higher they are, the higher the higher our premiums will be, and thus the higher our dividend payouts will be. Oh, what's that positive return on your time? Well, good for you. Yeah, good. That's great for you. I mean, to an extent, I have that too. Let's see what this guy's asking here.
So we're aware of the risk that we would hang on too long. We know that that's a risk, and we're very focused on not making that mistake.
Oh, good. They discussed the timing. Speaking of timing, they discussed timing of rate cuts at the meeting.
Between the risk of overdoing it and the risk of underdoing it. Not only that, we were able to focus hard on the price stability mandate.
All right, so that the video performs, I'm specifically focused on the impact of the Fed's rates on Tesla, on the YieldMax funds, and on the Defiance funds. Even though I'm looking at the market as a whole for purposes of the video and for the SEO, I am definitely really looking at Tesla specifically, because that's the main one I'm in for YieldMax, QQQY, JEPY. So keep that in mind. All right, wow, that was a fast 30 minutes with you all here. Look at the NASDAQ ripping. Man, I should have done... See, that's the thing. if I got up early this morning, I would have done like leap options on the TQQ. Not, I probably would have done a shorter term one, maybe even the December 15th. Who knows? To go really risky. But the thing is, that could have. So that obviously would have panned out really well. What's our big winners here? Home Depot, Goldman Sachs, Walgreens. I never got back into Walgreens since it went Canadian. Nothing against anything Canadian, of course. But yeah, I just never, I don't know, since it was a former ticker, the WAG, I think WAG, I never got in. I want some SVOL and FVPI. Yeah, I got to do videos on that too. I was supposed to be on a 2 to 3 video a day schedule. I did join a live stream yesterday, but that wasn't on the podcast channel. We didn't get around to filming for the podcast. We're going to try to do that today, but stuff always kind of seems to come up and get in the way regardless. So yeah, so the thing with the TQQQ call options, so it would have worked out brilliantly, obviously. But the flip side, he could have said he was going to raise rates again, and then the Nasdaq could have tanked. So that's always the risk of that. If the dot plot came back screwy, it could have gone the wrong way. Yeah, true. All right, you all. So we went over 30 minutes, so I'm going to end it there. Glad that at least rates are staying steady. I guess that's good news for now. Thank you all for tuning in. Like, comment, and subscribe, and we will catch you all probably later today. Thanks again. Take care.